We have just received a major warning. The U.S. is about to hit its debt limit on January 19th. That is less than 1 week away. Look at this. So this right here says, Treasury Secretary says U.S. to hit debt limit on January 19th, setting up a showdown with the GOP. However, she warns of extraordinary measures needing if Congress doesn't raise the limit. Now, what's going on here? Well, here's what I can tell you. Right now, the United States is about to hit the debt limit of just over $31.3 trillion. This is going to come on January 19th. As a result, the Treasury is going to take extraordinary measures if Congress cannot raise the debt limit. But we have an issue. According to a senior official from the White House, they're actually saying that the White House and Democrats don't have any plans of even negotiating the debt limit until a few more months. They're not even going to start, and I will explain why in just a minute. First, what is the purpose behind extraordinary measures? Well, the purpose is very simple. It's just to conserve capital. Extraordinary measures means that the Treasury is not going to pay out what they have been. They're going to try to hold on to as much capital as they possibly can. So what does this mean? This means the Treasury is going to take every action to avoid a default on debt, because that would be devastating to the U.S. economy and other financial markets across the world. Now, the first course of action is actually pretty simple. Treasury Secretary Janet Yellen, she just sent a letter to Congress urging leaders to increase the debt limit once again and do it as soon as possible. That's the first step. The next step includes withholding some investments from retirement funds for like postal workers as well as federal government employees as well. Now, she did say that once the debt limit is increased, that those retirement funds will be made whole once again, but they won't be made whole until the debt limit is increased. So she's going to withhold investments to those funds in the meantime. Now, according to a senior administration official, they say that the White House doesn't believe that they are even going to be open to discussing the debt limit until possibly late April. We are currently in the middle of January. We got February, March, April. 3 months. We have a little bit over 3 months of wondering and contemplating and thinking that, okay, what happens if? That's what's going to happen. Okay? We have 3 months. Now, the reason for this is, again, pretty simple. Congress wants to know the exact amount of money that the United States has. They want to know the exact amount of money that the United States brought in for revenue from this tax filing season. Well, we're not going to know. We are not going to have a definitive answer until after the tax deadline, which is April 18th, which is a Tuesday, 3 days after the normal tax filing date of April 15th. So, here's what you need to understand. Congress is not going to do anything until they understand the numbers. They need to wait until the end of April to get a better idea of exactly how much money the U.S. government has, exactly how much or when the debt limit will be breached. Okay? And according to Treasury Secretary Janet Yellen, she believes the U.S. will be able to continue with their extraordinary measures until that point. Right? See it right here. Extraordinary measures. And she believes that we will be able to do this possibly until the middle of June. At that point, Congress must pass a debt limit increase or reduce spending. It's one or the other. However, right now, Democrats say, let's increase our debt limit, and Republicans say, let's reduce spending. It's which one's going to take that? Which one is going to be able to pass pretty much get the other party to say, you know what, you're right. We're going to go with you. That's the hard part, because I don't think Republicans are going to just increase the debt limit without reducing spending, and there's no way Democrats are going to reduce spending without getting something in return. But what they want in return is to increase spending. So that's a little bit of a problem. Now, here's the issue. What would not passing the debt limit entail? This is a question I get all the time. First, we would see payments to millions of Americans stop, or they would be delayed because the U.S. has no money. We have to pay off our debts first, right? That's the big thing. For instance, Social Security payments, and a lot of people say this, oh, Social Security, you're not going to get any money. The payments are just going to stop. No, that's actually not true. Social Security is actually from a different fund, okay? So because of that, the payments won't stop, but they would be delayed, likely 2 to 3 weeks minimum, according to a couple experts. So they're not going to stop, but they would be delayed. However, there are some payments that would stop. For instance, military service members, they'd stop getting their paycheck. You wouldn't get it. Public health funding, that would stop. A big loss would be that the nation's credit worthiness would be downgraded, meaning interest rates would likely spike. We're already seeing interest rates go up anyway, but rates would spike. Mortgage rates would increase. We'd see credit cards would get more expensive. Car payments, again, more expensive. And the U.S. economy would be in a complete tailspin, as well as the rest of the financial markets across the world. It would be devastating, not just for the U.S., for other countries as well. Now, finally, what are the chances we see a debt limit increase? Well, the chances are actually pretty high. But there's a problem. The problem is that both Democrats and Republicans will need to create a bipartisan bill to get this done. Currently, many Republicans are saying they are guaranteeing a debt limit breach if we do not reduce social spending programs. One of those is Social Security. So, what Republicans are asking for, and I don't mean all Republicans, but a handful of Republicans are asking for Social Security's full retirement age to be increased to age 70. It's currently age 67. They also want to see the $72 billion of the $80 billion that went to the IRS. They want to see that returned. If that doesn't get returned, they will not vote to pass a debt limit increase. Also, there's a host of other provisions as well that they want to see undone. But unless some of those things happen, Republicans could threaten a debt limit breach, a debt ceiling breach, right? So just understand, there's discussions happening as we speak. The problem is that nobody has an answer. Everybody has what they want, their agenda, right? Reduce Social Security spending, reduce the money that went to the IRS, increase the debt limit, do this, do that. But they have to get the majority of lawmakers on board. Again, they're going to need 60 votes in the Senate. As of right now, you got 51 Democrats, 49 Republicans. There's not 60 votes there for either party. And then you got, in the House, Democrats or Republicans only hold a very slim majority in the House of Representatives, which means they have to get every single Republican on board. The problem is, not every Republican is. So, we got a lot of issues here. This is a major warning from the Treasury Secretary, Janet Yellen, that the U.S. is going to hit the debt limit on January 19th, which is in just a handful of days, less than a week away. So again, that's a real problem. And I will keep you up to date on what's going on there. As of right now, there's not a lot of answers, but we will get answers very soon. So again, thank you guys for watching. Consider subscribing, and I'll see you guys on the next one.